Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope everybody had a very good day and a very beautiful week as well. And in today's markets, guys, well, we had a little bit of a nice green day to wrap up a quite interesting week, to say the least, especially with those NVIDIA earnings. And the reason for the green today, guys, is because this morning we got a consumer sentiment report that came in better than expected. So in today's video, guys, we're going to go over a few details of that consumer sentiment report and see exactly why the markets liked it so much. Thereafter, we're going to go into our technical analysis rundown in terms of our major stock market indexes and our big tech names. And then we're going to cover a few subscriber requests that we have prepared for you guys today. So we got some requests from James, Charlie, and also Naveed that we're going to tackle, guys. And as I've said, we're going to do these subscriber ticker requests every single Friday. Going to try to get in at least 3, 4, or 5 every single Friday for some brief technical analysis. And then to conclude the video, guys, we're going to go over my trades for the day and a quick recap of how the week went in terms of total profits and losses. So without further ado, let's get right into today's video. So SPY up a very healthy 0.66% and QQQ up a nice 0.95%, both trying their best to recapture a lot of yesterday's losses. Take a look at the heat map, guys. Stark contrast from yesterday's trading, of course. The entire heat map was red yesterday, and now we have a much more healthy day. Big tech performing very well. Semiconductors really stealing the show once again. Nice little recaptures here. NVIDIA pushing forward again. AMD undoing some of the damage that was done yesterday as well. Overall, though, guys, a fairly bullish day. The banks are back swinging, and we also had a slight little negative day on healthcare, but that's okay. Healthcare is still fairly strong in my opinion. And even the bottom half of the market really participating in today's rally. No major red points, to say the least, except really for Intuit, which had their earnings yesterday. They were down about 8.35%. Still a little bit of an overreaction in my humble opinion. On the one-day relative, where does that put us, guys? Well, everything pretty much in the green except for that healthcare sector. On the 1 week, however, still a little bit down here, guys. Yes, the SPY still down on the week. You can't really see it on the charts, but the SPY is down on a week-over-week basis. The QQQs, however, did etch out a nice little week of green. As a whole, though, guys, only technology is your leading sector on the week. Everything else, still a lot of red for the week, for the pretty much the week that just happened, right? So very mixed market, still a little bit timid since we're currently at the top end of the levels right here near the all-time highs, right? So with all that out of the way, guys, let's jump right into our consumer sentiment index readings. And what we got this morning, guys, was fairly bullish, right? So we were coming in with the expectation of about 67.5. The scale is out of 100. The closer you get to 100, the more confident consumers are in the economy. And obviously, the closer you get to 50 and below, well, the less confident people are in the overall state of the economy. So this came in as a more bullish read than expected, which was fairly good. However, let's give it some context, right? So you can see here, prior to the pandemic, consumers were very happy with the way that the economy was going, of course. Everything was beautiful. But ever since the pandemic happened, guys, well, you obviously know the consumer sentiment has been pretty much not as good as before the pandemic, right? Consumers still a bit worried about high prices, still a bit worried about high levels of inflation and higher interest rates right now. That's why even though we are on a nice little uptick since the midpoint in 2022 when we were really at our worst, we're still not back to pre-pandemic highs. So consumers still a little bit worried, mostly in this report as well, due to the high prices, guys. But as I've explained several times on the channel before, inflation and prices are two different things, right? So what happened in 2022 and early 2023 is prices started going like this because inflation was 6, 7, 8%. And now prices are back to a more normal, stable price increase around the 3% mark. So we've really tapered off the growth. But prices, guys, are not going to go down. As a matter of fact, if you expect prices to go down like this, you are kind of hoping for a recession. That is the only time that companies are going to drastically drop their prices is if there's not enough demand. And that's just currently not the case. So yes, prices are still a lot higher than they were prior to the pandemic right here, but at least they're not skyrocketing still at an exponential pace. They've now resumed a more normal pace of price increases. So in essence, we may never see the level of prices that we had back in 2018, 2019, and 2020 prior to the pandemic, but at least things are not getting substantially, exponentially worse, right? So that's pretty much the gist of things for your consumer report. Still a very decent report, but as a whole, guys, you can tell we are still really not back to the confidence that we had prior to the pandemic. And that is going to take some time, Inflation still needs to come down. Interest rates need to come down. And then consumers need to get used to having more purchasing power, because as of lately in the last year and a half, people have just been really tight with their money, and that is perfectly normal, guys, right? So moving away from that, let's jump right into our technical analysis portion of the video here. We're going to start it off with SPY, and not much has changed even despite the fact that we got a heck of a drop yesterday. So where do we currently stand? So we're currently in a very, very nice daily uptrend currently, right? And the SPY is currently struggling with the levels right now, bouncing off of our 12 EMA. We are pretty much in a consolidation range right now. No clear daily uptrend from here, and also no clear downtrend, right? Still just holding levels right now. So the following guide remains the same. If we break yesterday's low, we will be in an official daily downtrend continuation, and we will rely on our lower areas of support starting between 523 and about 512. This 10-point range is huge support for the bulls. Why? Because it is a level of weekly, huge level of weekly support, right? All of your prior all-time highs are right there. We also have our 12-weekly EMA right here. So in the event that we do continue this daily downtrend here into next week, perhaps, well, you could be expecting the bulls to put up a little bit of a fight as we move lower into the 510 level and tag this 12 EMA something like this, right? The higher low and then potentially the trend continuation. So a little bit of a sell-off is potentially still on the table, but as of now, the bulls not giving up too much ground. We could just see them push past the all-time highs into next week, provided there's no real negative catalyst for the market. So that is pretty much where we stand, right? Very, very mixed trading right now. And in terms of that, guys, really need to wait to see the weekly higher lows being set and weekly higher highs to confirm the weekly uptrend that we had since lost right here. Now, moving into QQQs. QQQs also looking very, very healthy right now. Daily uptrend is still underway. QQQs, as opposed to SPY, never really lost them. So the daily higher low is still right here, 449.50. If we were to lose this level into next week, it would be up for consideration for a daily downtrend. Now, where could that daily downtrend take us, guys? Right into this green box of support. Keep an eye on 447 down to about 435, this 12-point range as well. That is going to be the perfect location if the bulls do choose to take a little bit of a breather here and set up for the weekly higher lows. I do believe this is where they will put in a stop and potentially go on for that next weekly leg higher. So all in all, the bulls looking great weekly closes as well. Nothing bad to say. Still no real red flags in the market right now. The bulls remain in full control of every single time frame, monthly time frame, the weekly time frame, and even your daily time frame. Now moving into financials right here. Financials trying to get a little bit of a bounce here together. However, financials are in a daily downtrend right now. So daily downtrend is synonymous with weekly consolidation, and we can see that right here. Big weekly consolidation, weekly uptrend, looking for that weekly higher low for the future weekly trend continuation right now. The bulls still do have a decent amount of space, anything above 40.2, just looking for that weekly higher low for that trend continuation. We're bouncing off a very interesting level right now. Keep an eye on this. Prior resistance, current support right now. We have the 50 EMA right below that, and even the 12 EMA right here at about 41 on the weekly. And the weekly has been a great level for the bulls to play defense on financials in the past. And I do expect that to hold forward as well, as long as the market bullishness continues. So still in financials, no real red flags just yet, guys. The bulls doing a very good job of defending these timeframes on the longer term weeklies, and even the monthly is a gorgeous monthly uptrend right now, right? So in the event that we continue losing a little bit of ground here, we still do have a very massive support coming up at around the $41 level. I still don't think there's any red flags, guys. Tons of space between us and that 40.2 weekly higher low. Now moving on to healthcare. Healthcare taking a little bit of a dip here the past 2 days. Just some healthy consolidation in my opinion. They had a gorgeous daily uptrend going. We have now since lost it. So if ever the bulls set up for the lower high into lower low, daily downtrend, you guys know what's coming. Weekly consolidation, and dare I say, it is, with the current weekly candle formation at least, it is pretty much weekly consolidation already, right? So at this point right now, what do we have to look out for? The bulls do have tons of space. Anything above 138.15 is just going to be looking for that weekly higher low for the further trend continuation. What I would not like to see is the bears pull down lower into this area, 141, 140. That would just be too much at that point, and we may end up with something like a tightening range, best case scenario. And the worst case scenario is, of course, the weekly downtrend follow through. As of now, no signs of that. The bulls still do have a very gorgeous amount of space left to set the weekly higher lows into that weekly uptrend. So we'll keep a very close eye on our healthcare sector. One of my favorite names still in healthcare right now, guys, is AbbVie, right? AbbVie pulling back into this gorgeous level right here, this green box all the way down to about 150 could be a juicy swing trade opportunity. And I will probably look to play this one maybe over the next week or two. Now, moving on to semiconductors. Semiconductors, great outperformance, daily uptrend still underway. No secret there, right? Higher highs, higher lows, higher highs. All very nice indeed. Now, if and whenever this move tops out, we're just going to be looking for that daily higher low for that further trend continuation. Target this area right here. First tap is going to be the previous all-time highs, 238.50, and then we're coming up pretty much down here, right? This whole prior level of resistance, that's about the 234, and it does coincide with our daily EMA as well. So if the bulls do want to pull back somewhere, set the higher lows, and then ramp up further, that would be a very nice breakout retest trade. On the weekly, guys, weekly still looking extremely healthy, right? We had the weekly downtrend right here, and now the bulls with the one-shot V-shaped recovery engulfing move. So eventually they will have to set the weekly higher lows as well. Whenever they go on a massive tear, guys, they still have to set the higher lows, right? Higher lows and then ramp, higher lows, ramp, higher lows, ramp. So eventually we will need to set the weekly higher lows. And the better case scenario would be if we do it fairly quickly. If we come down into here next week and retest all of these previous highs, right? 233 all the way down to about 230 could be a juicy breakout retest opportunity for a swing trade before the further launch. Semiconductors looking very healthy. Now moving into IWM Russell. Russell putting in a nice green day here today, 1.11%, but the Russell is still stuck in a little bit of a daily downtrend right now. Yesterday's candle definitely did not do them any favors. So if we want to reverse this, what do the bulls have to do? Well, we have to get as close as possible to 209.30 and then set up for a daily higher low and get this daily trend back. Because as of now, the bears are in full control of this. If they are to maintain their control and send this a little bit lower, you guys obviously know where we're probably going in this location right here. 201 down to about 195, our huge prior level of weekly support and resistance, 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 congestion zone right here. This would be the likely area where I do think the bulls will put in a stop before potentially attacking this 212 level. And if ever they don't continue down further and we do get that daily uptrend, well, you guys know where we're going, trying to gather some momentum, the weekly higher lows, and we're trying to make a second attempt at breaking this this very, very sturdy, to say the least, resistance level, right? Huge support in the past, resistance right here. So the 212 is going to be a tricky location, but if we can mount above, retest this, that is when I really do think that the Russell does have the best chances of moving forward. In my opinion, guys, probably June, July, right? Maybe even midpoint of July will be the time where the Russell will really start breaking out. We need to get more confidence on inflation coming down, and we need to get more confidence surrounding the date of the first interest rate cut. And that is when your growth stocks are really going to start mounting above and really gaining the levels. And now lastly, our Dow Jones, guys. So looking at the Dow Jones, not too bad of a day, a little bit of a flat day for the Dow Jones, right? Especially after yesterday's huge day of red. The Dow Jones is still desperately hunting for its level of consolidation, right? So we lost the daily uptrend right here. You can see that clear as day, loss of the higher lows right now. So now it's up to the bulls to prove to us when this move is bottomed out, how much can they bounce and can they reset the daily uptrend in their favor? If ever the bears take control with a lower high into lower low, well, then we'll be targeting this lower zone right here, this green box that I've labeled on the chart. That's going to be 38,600 down to about 38,300. This location right here going to be the last area for the bulls to put up a stand to set that weekly higher low and go for the weekly trend change right now, right? It was a gorgeous weekly trend back here. We lost it, and now the bulls have a chance to engulf and recapture, but they need to get their butts in gear. They're kind of running out of space. If we take back too much of the move, guys, the best you can end up with usually is a tightening range. So it takes a lot longer. You need to see the bulls put a stop to it right here. Look at the size of the retracement already. 38.2. If they get down to the 50, guys, that's going to be 38,800. That is pretty much the last line in the sand level to which we can then recapture this in an easy fashion. If you take back too much of the move, guys, it's very tough for the bulls to mount and get back above, right? Very, very, very difficult. So they really need to get their butts in gear shortly. Now, moving into our big tech names, shall we? So moving into crypto hasn't really done too much since that breakout. So I guess we can cover a little bit of crypto because we have the time, right? So Bitcoin, taking a look at Bitcoin, gorgeous daily uptrend, still hunting for the daily higher low right now. Anything pretty much above 66,000 right now is just going to be looking for that daily higher low. Currently bouncing off this big yellow line. The big yellow line is from the previous all-time high highs. So really using that area nicely as support right now. All of your short-term moving averages are right here too. So that's why the bulls are really able to manifest some support down here and trying to mount for the rally. Obviously, the rally continues, break of 71,804, and then we're pretty much on to our all-time high area of resistance. So all in all, Bitcoin's looking fairly healthy. No red flags. On the weekly as well, Bitcoin is still looking quite healthy. It was a weekly downtrend here by the bears, and now we've recaptured, pretty much putting in an engulfing move. So now it's up to the bulls. This candle closes on Sunday. I would like to see them close this candle as green as possible, because then it really sets them up here, guys, for the engulfing move to the all-time highs. Maybe then they can reset the weekly higher lows and blast off to new weekly uptrending fashion. So Bitcoin, all in all, looking very good. The monthly also holding up very well. In terms of Ethereum, guys, Ethereum had a monster rally after the ETF news the other day. So that's still looking extremely good. 20% update on Ethereum in one day. And now just really holding the levels. We're really holding above this zone right here. Let me just label it, because I didn't label it on the chart so far. So this prior area of resistance right here, that is the one that we're back testing right now as support. So all in all, looking extremely healthy on Ethereum, guys. Daily uptrend is beautifully underway, looking for the higher low for the eventual trend continuation, right? And this support level really goes all the way down to about 3,500. 3,500 would be a retest of the 12 EMA. So even if they do set a little bit of a daily downtrend, guys, just going to be looking for that weekly higher low for the trend continuation, right? It was a weekly downtrend. The bulls have now engulfed tons of space to set that weekly higher low and mount the levels for Ethereum. Ethereum really not too far off its all-time highs right now. If you do get this break of the 4,000, the next resistance is your all-time highs at 4,800. So looking very, very, very healthy, to say the least. Now let's move on to our big tech names, shall we? Give me a quick second. And let's do Apple. So Apple, very, very nice day, 1.66%. Great recovery after yesterday's day of trading. So Apple's still pretty much in this daily uptrend formation. And then they kind of lost it, right? Loss of the daily higher lows right here. So what we're going to be looking out for is, can the bulls pulled up the V-shaped formation recovery and continue this trend up into our resistance band, which is going to be 194 up to the all-time highs of 198. If ever they can't get it done and set up for the lower high into higher low and get a daily downtrend, you guys know the drill. Just going to be looking for the weekly higher low for then the weekly trend shift. We were in this massive, massive weekly downtrend on Apple for a very long time. They finally got the engulfing leg underway, and now eventually we do need to set that weekly higher low and reset for the weekly uptrend. So if ever Apple comes down into the lower 180s, as I've been saying for the past couple of weeks, if we retest 181 down to about 178, juicy swing trade location, guys. Breakout, retest of support, and then run. This location right here is going to be the optimal location for a trade, in my opinion. All in all, though, looking very, very healthy on Apple. Great recovery after their earnings. Moving into AMD right now, AMD with a healthy recovery after yesterday's disaster, right? So AMD looking quite good, as a matter of fact. So AMD on the daily looking like it was a nice daily uptrend before we lost the higher lows right here, but the bulls have a chance to save the day. Now, the daily uptrend is kind of ugly right now, especially with the last 2 days of trading. So to really recapture this, we will need a break of 173.27. If we don't get it, guys, and we set up for a lower low and we break yesterday's low, 158.10, well, then your daily downtrend simply continues at that point, and we will still be looking for the eventual weekly higher low and get this weekly uptrend back. We had this weekly downtrend by the bears, nice engulfing move right now, still hunting for the weekly higher low to get that weekly trend change going, which is why, as long as we're down in these lower levels, guys, 160 down to about 140, I know it's a wide range, but this whole pocket, as low as we can get possibly, should be a very juicy location for AMD to swing trade. As a matter of fact, I've been swing trading it fairly heavily with short puts in the 160 down to about 145 over the course of the last month and a half, and it's been very kind to me. Have not been assigned once, and even if I would be assigned, guys, it's a juicy location to pick up some shares for a potential rally on higher once we are through this area of consolidation. And I'll remind you, the valuation down here at about the 148 level is really not that bad, guys. Peg ratio of about 1.16. That is pretty cheap. So AMD, in the grand scheme of things, not looking too bad at all. Moving on to Amazon right now. So Amazon also having a little bit of a day of consolidation, 0.17 to the downside. Amazon really, after getting rejected from the all-time highs, just in this perpetual daily downtrend, right? Very unfortunate for them, but they did do a great job of really holding the levels throughout April and March, even when the rest of the market was selling off. So Amazon, a little bit of daily consolidation right now, no harm, no foul. Daily downtrend still underway by the bears right now, which means that we are still in weekly consolidation. Coming up on the 12 EMA and coming up on our massive box of support, guys, 177 down to about 167, this 10-point range. I know it's a fairly wide range, but we are still just eventually looking, guys, even on the longer term timeframes on the monthly, looking for those monthly higher lows for the further trend increase. And this box right here is your previous all-time high resistance, which is why I say it's going to be very, very tough for the bears to break through this. If anything, we may just get a little bit more weekly consolidation, but anything above 166, just looking for that weekly higher low for the weekly trend continuation. So all in all, looking very good. I'm still a very, very big fan, guys, of playing Amazon 178 down to about 175. If you can get those strikes on some short puts, should be a fairly, fairly juicy level to continue making swing trades on Amazon from. So very, very nice chart setup. Just some healthy sideways, pretty much. Well, you know, not really sideways, but slightly down, right? We're not seeing this. It's very, very healthy, very, very streamlined consolidation. Now moving on to Google. Google also having a nice day today, 0.73% to the upside. So all in all, guys, this chart is so healthy. Nice daily uptrend, looking for the daily higher low for the trend continuation. Tapping the 12 EMA, very nice. Bulls are playing defense right here, so it remains to be seen. Can they continue this momentum into next week? I rarely go over to the shorter term timeframes, guys, because we really look at things on the daily and the weekly here just to gauge who's in control. But if you want to know when your daily higher low is set, just look for the hourly trend change, right? Ever since we've been in these 3 days of consolidation, you can notice that we've been in pretty much a massive hourly downtrend. We try to recapture it here. The bear said no. Trying to recapture it again. We'll see. Usually you need an hourly uptrend to last 2 days before knowing your daily higher low is set. As of now, that's just not been the case right now. But still, Google looking extremely healthy. I mean, how can they not look healthy, right? We're literally at the all-time highs. And even if Google were to set up for a daily downtrend on the weekly, tons of space, anything pretty much above 165, looking for that weekly higher low for further trend continuation. All in all, Google looking very good. Personally, myself, though, I would like to see maybe the lower 170s, even high 160s. That would be a possible swing trade location for Google. I really don't think we're going to revisit, guys, the 150 levels. I think those are pretty much gone for the year, unless the market really has a massive sell-off, but I don't really see that coming either. We're just a lack of negative catalysts in the market right now to warrant a 10-15% correction on the QQQs or on the SPY. We literally just had one in April. Now moving into Meta. Meta also looking fairly decent on the day, 2.67%. Meta doing a great job at protecting these lows right here. We were in jeopardy, guys. If we were to smash those lows, it would have been a daily downtrend continuation. So far, so good. The bulls holding up fairly strong. Daily uptrend, right? Looking for the daily higher lows. Seems as though we've got them. And now we're going to attack these higher levels. We need a break of two things, guys, to continue this daily uptrend. Going to be a break of this candle right here. 480, which is exactly our previous resistance line from all the way back here. All of this support is now resistance, and we're finally above these short-term moving averages. So on Tuesday when the market opens, because obviously we have a long weekend coming up, well, if we can get above this level right here, it's going to look extremely juicy for that breakout here, guys. And what I would like to see thereafter is breakout, retest of this level as support, and I will probably be entering a nice little swing trade opportunity here for that continuation, possibly back to previous all-time highs. Now, I'm not saying that we may get something like this, but just a maybe slow grind higher into your all-time highs, as Meta is pretty much used to doing, right? So looking very strong on Meta. Great weekly recovery as well, right? After this huge earnings collapse, the bulls are now trying to set as much space as possible to eventually recapture that weekly uptrend. So all in all, looking very good on Meta. Now moving into Microsoft. Microsoft also healthy day, 0.74%. Microsoft's chart is just textbook, right? Gorgeous daily uptrend, looking for the daily higher low for the trend continuation. Obviously, trend continuation is a break of 433.72, which is the all-time high. And beyond that, look to the psychological numbers. It's going to be 450 is your next area of resistance, guys, since we're at the all-time highs. Now, if for whatever reason it goes the other way and Microsoft loses the daily uptrend coming into these lows right here, I really do think that the 415 level represents a great swing trade opportunity. Just have to look on the weekly, guys. Weekly was great. Nice weekly uptrend breakout. Then we lost it. Triple, quadruple bottoms. No weekly candle closes below this location. And then we have an engulfing move. But we still haven't really got the weekly trend back, right? Still need to set that weekly higher low for the trend continuation. So if ever we do pull back in this lower 415 range, that is why I like this area, guys. Weekly higher low for the trend continuation. 415, the 12 EMA is right there, and it is also the upper band of our prior range of resistance. All your moving averages are there too. So if Microsoft comes down and taps the 415, could be a great location to either write some short puts if you have the capital to do so, or maybe some swing trades with some shares if you want to continue on with the Microsoft rally throughout the year. And I do believe they will continue to outperform this year. Now moving into Netflix. Netflix also having a very healthy day, 1.74%, pretty much cracking a new high. So Netflix's chart is textbook, just like Microsoft's, right? Gorgeous daily uptrend. Where did we set the daily higher lows, guys? That's why I draw these boxes into our previous level of resistance, using it now as support and looking to run. So Netflix, really textbook performance by them on the weekly. Look at this gorgeous weekly candle close. Total engulfing move by Netflix. So in the event we continue, eventually we will need to set those weekly higher lows. Even Netflix, after great weeks, still need to set the weekly higher lows before mounting further. So whenever those are, I would like to see them mount a little bit further above and then maybe retest this zone right here. Could be a juicy little entry location breakout, retest, and then looking to run. Where would we run to at that point, guys? The all-time highs is next resistance, about $690, $700. All in all, no red flags on Netflix whatsoever. And even if we were to lose this, guys, and set a little bit of a daily downtrend, you guys know the drill. Just looking for the weekly higher lows for that weekly trend continuation. If we lose it from here into next week, target this lower level right here, 600. Now moving into NVIDIA. NVIDIA, I mean, look at these candles, guys. Extremely beautiful chart, obviously after their earnings. Daily uptrend is clear as day right now. Eventually, we will need to set the daily higher low. No sign of that right away. How will you know that it's in for consolidation? Need a loss of the hourly trend and a loss of your hourly 12 EMA moving average. So moving into that, guys, as soon as that happens, looking for the daily higher low for further trend continuation. If we lose this coming into next week, guys, could be a great opportunity for the breakout, retest of the all-time highs, and maybe run. If we do pull back down here under 1,000, let's call it 990, 980, 970 location, not saying it's going to come down and tap this level right here because now they've created a lot of space. But if we do pull back ever so slightly into it right here, could be a great location to maybe make another swing trade on NVIDIA for that trend continuation. Weekly, still looking excessively strong. No red flags to speak of whatsoever. Now moving into Tesla. Tesla up 3.17%. Great day for Tesla as a whole here, guys. But still, on the week, really flat, right? Here is your Monday's trading candle, and here's where we ended Friday. It's been a very volatile week up and down for Tesla, but all in all, relatively flat to where the week began from. So where do we stand on Tesla, guys? Well, still looking for the daily higher low for that trend continuation. We are not yet breaking these lows, so the daily uptrend is still technically intact. So what we need to see, guys, next week from Tesla is a break of 186, continue this daily uptrend, and really start gaining more and more space on these weeklies, because on the weeklies, guys, the bears are still in favor right now. Weekly downtrend, we got a nice weekly engulfing move, but it's up to the bulls to prove it to us that they can get the weekly uptrend going, right? As of now, still no proof by the bulls in terms of that. So still need to do a little bit more progression towards the upside is Tesla, but still forming a nice base of support. And the ultimate base of support is all the way down here to about 161. It's the level they cannot lose. If we do lose these lows right here, guys, unfortunately, we do end up in a weekly downtrend, and then it's not going to look pretty if ever we lose these lows. Could be heading into continuation into the maybe 160s, 150 levels. We're not there yet. A lot of trade left for Tesla, right? And the markets are seeming to favor these interest rate sensitive stocks a little bit more now, right? Because your US 20-year, right, your yields have come down off their peaks that they were pretty much end of April. So now you're seeing a little bit more bullishness in some of these interest rate sensitive stocks, but you can see how mixed Tesla is right now, right? It looks like it wants to run, but then again, you have to think about the fundamentals. The fundamentals really don't warrant a run. So the only reason that this stock would run is because it's getting left behind in relation to the rest of of your big tech stocks. That's the only reason. It's definitely not going to run because the fundamentals are improving. The fundamentals on Tesla won't really improve before maybe Q4 of this year, but most likely highly in 2025. Now moving on to Palantir. Palantir with a little day of recovery here today, 1.4%, but in the grand scheme of things, guys, still looking a lot weaker than it was before the earnings, right? Bears still in control, daily downtrend right now, looking to desperately protect these lows right here. 20.45 is the flush zone. Really need to hold this level right now. So if the bulls can mount out a nice little recovery over the course of next week, we really need to break 22.13. Give me 22.13 and you get the first daily uptrend since you've had back here. So it's been a long time, guys. It's been pretty much almost the entire month of May that we've been stuck in this downtrend, right? So the bulls really need to get their butts in gear next week. If they don't, if ever we do flush these lows onto lower lows, well, the weekly downtrends, guys, will simply continue at that point, and then we'll be looking really to the lower end of this support zone, pretty much $19 for the touch of the 12 EMA and coming into our previous resistance candles, right? This is why I like this green box so much on the monthly. Huge monthly support, huge monthly resistance. And now that we've mounted above it, they should still be able to use it as support. That's why the bulls are not giving up, guys. They're really using the longer term timeframes as support. So all in all, Palantir not looking too bad. The bulls do have a lot of work to do, but just to say, as long as we're still within this lower $20, $19 range, I think it's a gorgeous opportunity to be picking up Palantir just because of the long-term trend that we're in. And it is an uptrend, guys. Eventually, I do believe, as long as the markets remain on their course for the year, I do believe Palantir will have an opportunity to start attacking these higher levels once more throughout the year. Now, moving on to PayPal. PayPal really not having the best week at all, up about 0.10%, but you really can't tell from the candle formation today. Still in a very heavy daily downtrend right now. Not even oversold on the daily time frame, unfortunately. The short-term time frames like the 4-hour and even a little bit of the 1 hour were a little bit oversold, but on the daily, still a little bit of wiggle room, right? So the level that PayPal cannot lose is pretty much this 60.82. I call it about 61 because it is around that level. The reason why that's so important, guys, is the weekly closes. And a matter of fact, let's take a look at those weekly closes because I haven't looked at them before this video. And there it is, right? Lows right here, 61.92, closing slightly below it right now, 61.6. That unfortunately qualifies for a weekly downtrend. So PayPal had it. They had the weekly uptrend. We had the tightening range. I wanted them to keep the lows very tight, but unfortunately now weekly downtrend into PayPal. So unfortunately, guys, 60.72, next area of support. And then we really come into these guys right here around the 58s. At this point in time, since we've lost the weekly, guys, it's not looking the best. I'll be quite honest with you. And if this monthly candle closes like this in terms of momentum, it's not really looking good on the monthly either. We are in a monthly uptrend looking for the higher low, but if the bears take back too much of this move, guys, we may just end up in a tightening monthly range on PayPal because it is a transition year for the company. This week has just not been kind to fintech as a whole. PayPal's down. Square is also considerably down for the week. Even stocks like SoFi, who had a nice little breakout last week. SoFi really down over the course of this past week as well. Another one that comes to mind, Affirm, right? Affirm also coming down on the week, even though that one is not a very profitable company, right? But all in all, guys, just not a very favorable name right now. I will be more interested if I can get some premium below $60, 60, 59, 58, writing some puts. I may take my chances down there. So that's pretty much everything we had, guys, in terms of our daily market rundowns. Now let's jump right into some subscriber requests. So first we're going to go over one from James, which is for Starbucks and Target, and also Charlie asking if I could do Starbucks as well. So Charlie will do Starbucks as well as James' request at the same time, and then I'll get to your other one, which is VXX, the VIX, right? So let's do Starbucks and let's do Target on the technicals right away. So in first glance on Starbucks, guys, you guys obviously know, covered it on the channel. We understand what happened on their last earnings, guys, and it was not good. Let me do a quick little recap. Starbucks has two problems right now. Number one, in 2018, 2019, they started a massive expansion into the Chinese market, and it was supposed to really give the company a new sales growth vertical. They, as a matter of fact, about 23% of all their new open stores and their store count in general is in China right now. The only problem with China is China's in a recession. Consumer discretionary income is down a lot, just the same as it is in the US. So that market expansion has kind of been halted in its tracks, and Starbucks is just not able to monetize the customer base very well over there right now because of the economic factors. Number two is consumer discretionary spending in the Western world. Inflation has been very, very high, and Starbucks is not a company with tremendous pricing power, right? When it's faced with diminishing sales volume, the only thing that the company can try and do is raise prices. And they raised prices in 2022, they raised prices in 2023, and now they're trying to raise prices again in 2024, but the consumers are saying no more. For a large latte to be paying $7-8, depending on what flavor you get, of course, right? $7-8 for a latte, guys. You know, it might have been fine when everybody had a lot of money in the past 2 years, but now that inflation has eroded everybody's buying power, people have just changed their consumption patterns. Rather than buying Starbucks, I have a lot of friends myself, guys, that instead of going to Starbucks now, they just make their coffee at home. They've bought a cup machine, right? An espresso cup machine or something like that, where you put those little capsules in and it makes you a coffee. You just make your milk yourself. That's much cheaper than going to Starbucks. And to the point where, to the point where those consumer discretionary spending patterns are going to change back in Starbucks' favor, guys, it's going to take a long time. It's not something that just changes on a dime, right? Don't expect Jerome Powell to decrease interest rates once or twice and everybody to just flood back to Starbucks. It takes a lot of time for people to build up savings, build up their income, feel that they're quote unquote richer than they were before again, to finally start splurging on these excess items. So those are the problems that Starbucks is facing right now. And where is it hitting them most, guys? It's hitting them in the EPS and it's hitting them in the margins, right? We covered this on the channel. I mean, EPS, right? You could see really flat EPS over the last 3 years, arguably even flat in relation to 2019 too. They're supposed to expand this year, but they cut it back. They said, you know what? We're not going to grow at all this year. Even in revenue, guys, not going to grow at all this year. Maybe 2025. But then again, that all depends on consumer spending power, right? It really hit them in the margins, guys. Take a look over here. Look at this negative performance on EPS, just not very good at all. So essentially, I know I'm supposed to do the technicals right now, but I just wanted to give you a backdrop just to be saying, do not expect a recovery like this right away. In my opinion, guys, it's just not going to happen. And as a matter of fact, even at $80, Starbucks is expensive, guys. It's a 1.62 peg. You would think that since the stock is so much off the all-time highs, that means it's cheap. It's not cheap, guys. When your EPS goes down and when your company's financials go down while the stock price is going down, you're pretty much at the same point as you were back here, right? It's just everything is going down at the same time. To give you guys an idea of how not cheap Starbucks is, right? 1.62 peg. Would you rather pay 1.62 in terms of growth rate for Starbucks, or which is currently in a very, very tough situation for the company right now, arguably one of the toughest in the last 10 years, or would you rather pay that exact same peg ratio for a company like Meta, right? Meta's peg ratio right now at 475 roughly is 1.57. They literally have the same peg ratio. Meta is at the all-time highs right now. They have far better growth for the future. They have far better net margins as well, right? They're completely different businesses, of course, but the peg ratio allows us to compare different businesses amongst each other because of the relation with their stock price versus their expected growth. It's all about growth for Wall Street, guys. The stock price itself, this $78 in relation to the all-time high, it means absolutely nothing to Wall Street, right? So I'll give you guys the craziest example of that, right? If you want to look at a crazy example like that, look at Citigroup. You would think Citigroup is cheap after what happened to them in the 2008 financial crisis, right? Extremely cheap, right? The stock price is still down 90%. But does that mean that it has to go back to the all-time high? No, it's all about the growth rate of the stock. So in terms of Starbucks' technicals, guys, we are coming into a nice little area of support right now. Going to go top down. So on the monthlies looking good, right? We're bottoming out in the low 70 zone. That's where it has bottomed out 2 times in the past 4 years, July 2022 and the pandemic. So you could say that this area is a decent area of support. Now, what do they need to do? Well, number one, Starbucks is in a massive monthly downtrend. So for the bulls to recapture the monthly, they need a lot of space and a lot of time, guys. A monthly trend takes months and months and months to reverse. Now, in terms of the weekly, let's go on the weekly, guys. Weekly massive downtrend as well. So even though this bounce is fairly good, it's not the best. Keep an eye at the size of the bounce, right? As long as this weekly bounce is underway, they've put in 50%, you need to see at least 618 or at least the 786. If they can bounce that high, then they stand a good chance at reversing the weekly. But even the weekly, guys, it takes weeks and weeks and weeks to reverse into a weekly uptrend, right? And so how do you know that this weekly bounce is finished? That'll be a loss of the daily uptrend. So now we are in a nice daily uptrend right now. If we were to lose that at a certain point, well, then your weekly bounce is finished. And since they've only bounced 50%, there's a good chance that they retest these lows right here. So in essence, you really need to see this daily uptrend continue higher and higher until at least maybe $83, $82. That would be a good location, creating enough space to maybe eventually recapture the weekly uptrend. But you can see, guys, Starbucks pretty much over the last year and a half, it really hasn't done anything. And I don't believe it will do anything until their fundamentals drastically improve. So the bottom line for this company, guys, is the stock price at a decent level in terms of technicals? Yes. Is it cheap? No, it's not necessarily cheap. It's just at a good level on the technicals. Will Starbucks eventually die out? I don't think so. They have a lot of brand value and people eventually probably will return to the brand. However, guys, it's going to take quite some time. So if you're in this one for a long-term position, then perfectly fine, guys. If you can afford to wait, 1, 2, 3, 4, 5, 6 years, and you want to include it as a part of a longer-term portfolio, no problem at all. In times of concern for companies, this is where you should be buying those stocks. Yes. But if you're looking at it for a swing trade here, guys, just a lot of uncertainty around the company. I know it looks cheap, but it's not actually as cheap as you may think. In my opinion, there are far better opportunities for swing trades. I mean, in terms of swing trades, guys, what are you looking to do here? Traded from 78 all the way up to 88%, like 12%. There's far, far, far better companies that you can get 12% on, mark my words, right? So that's just my 2 cents on Starbucks. I don't want to sound too bearish. I'm just trying to stress the concept that I don't feel any urgency to be picking up this stock right away, especially for a little bit of a swing trade. The swing trade was really, if you wanted to pick the bottoms on earnings, super crushed daily oversold conditions, right? And even weekly oversold conditions could have been a good little snipe location. Try your hand at it right now. But now that we're in a little bit of the middle situation, it's still, still a little bit risky in my humble opinion. So now let's move into Target. So Target, not going to talk that much about Target, but Target looked very, very good after their earnings, right? We are expecting a major level. This one is about the 138 line. You can see why the 138 is so important. Big touches in the past right here. Yes, we did break below it, but it is a decent level of support right now. So that's going to be the level that I'm looking for on Target. Now, top-down analysis, we were in a massive monthly downtrend. The bulls have put in a nice engulfing move, looking to set the monthly higher low for eventually get that monthly uptrend going once again. Now, in terms of the weekly, guys, the weekly is quite red right now, of course, guys. So weekly downtrend, eventually we will need to reset into a weekly uptrend. Hopefully the bulls can really get a stop in right here. How do you know that they're getting a stop in, guys? Keep an eye on the daily uptrend reversal, right? So now obviously after earnings, they are crushed. A lot of work for them to do to reverse this into a daily uptrend. As soon as you see a daily uptrend formation, you know that your weekly bottom is most likely in, and then you measure the size of the move on the weekly to eventually re-get this weekly uptrend. So all in all, Target not looking too bad in terms of its location, especially if you can get it down towards the 140. It just all depends. How is your view on the company? I don't want to sway anybody's view on the company itself, but might be representing a decent level for a technical swing trade right now. Just trying to find out some bottoms. Personally, myself, guys, I would be waiting out. If I'm looking to swing trade this thing, I would be watching for the daily uptrend. And let's say it does something like this, and you get the daily uptrend, you take the trade for the breakout, your stops pretty much go below the lows, and then you're targeting the prior highs right here. So that is possibly an idea for a swing trade on Target. Obviously, this company is not in the best position right now in terms of consumer discretionary spending and whatnot, but obviously it is also not in a terrible position, not as bad as it was at least last year. So it could be a nice little swing trade opportunity for this company. Now let's move into Charlie's request, which is going to be VXX. So let's cover that really quickly. So in terms of the VIX here, guys, the VXX is just a way that you can trade the VIX. The chart is always going to look like this, guys, just because you're not supposed to really hold this trade. This is supposed to be for swing trades. Whenever you expect a spike in the VIX, that's when you go in and trade this one. But this one is what they call an exponential log curve towards zero, right? It will always trend towards zero, then they split it, and then it once again trends towards zero. It's just the nature of how this thing moves. Now, in terms of the VIX, guys, how will we know? Charlie's question was, is there a probability of them going up in the next month or two? So In terms of the next month or two, Charlie, for the VIX, you can think of it very simply as the uncertainty index. We can actually go back in time and find how this is true, right? So if you want to see spikes in the VIX, look for times of uncertainty. Most recently, it was the inflation concern and Israel and Palestine. Last October, it was the rising inflation concern once again. If we move back in time, last March 2023 was the banking crisis. Prior to this was supply chain concerns, inflation getting out of control in 2022, and then our most massive spike was COVID. So you can see this thing only really goes up in times of uncertainty. Right now, the reason that we're so low is because we are at the most certain times in the last 4 years. We now have inflation somewhat under control. People do have good guidance on interest rates, even though they're high, and consumer sentiment is also a lot better, as we recently saw, right? Consumer sentiment is a lot better than it was in the depths of 2022. So that is why your VIX is not really spiking right now. In terms of the VIX, if you want to see a spike in the VIX, you can have one-day events like yesterday's massive red across the markets, which does translate into a spike of volatility. However, if you want an extended little move of volatility, guys, you need to watch out for two things: either deteriorating macro conditions. So if we line up a few negative jobs reports in a row, or GDP numbers in a row, or if inflation continues really getting out of control and we start to see a resurgence, well, then that is going to translate into an extended rally on the VIX. Also, if you see heightened geopolitical tensions, we can arguably say right now that even though the Russia-Ukraine situation is very bad, it's probably not at the peak worst that it was. And even the conflict in the Middle East that's going on right now, of course it's terrible, guys. However, it's not at the most uncertain level that it was just maybe a month ago. So if you start to see those two things really come back and really drive fear and uncertainty in those markets, then and only then will you get an extended rally higher in terms of the VIX. But as of now, guys, the market conditions are very favorable. There's just not that much risk or uncertainty on the table right now. The path of the economy, geopolitical events, inflation, all that stuff, the path is a lot more clear. And that's why you're not getting much pops on the VIX. And when we do pop, you can see how quickly it gets taken back. So that's pretty much everything on the VIX. Now let's move into Naveed's request right here. Can we do OKTA and Arista? No problem, Naveed, at all. In the future, though, we're only going to do one ticker per week. I know, guys, I'm very sorry that I kind of delayed these requests from you guys. In the future, I'll only do one per person just to keep it fair for everybody. But of course, Naveed, let's do OKTA and Arista. So OKTA, let's take a look at OKTA. OKTA was a company, guys, that I was trading a lot back here in the bull run, right? 2020, 2021, was trading this one a lot. However, now the markets have cracked down on unprofitable companies in a heavy way, right? So OKTA, the company, is not yet profitable. They're profitable for non-GAAP EPS, but their net margins are not still profitable, right? Still negative net margins. They're trending towards profitability, but still not yet. So in terms of the technicals, guys, well, we are significantly down off the all-time highs, but these all-time highs don't matter. That was a different market when money was free and companies could raise capital as much as they wanted to, right? So let's take a closer look at the current market that we stand in right now. So nice monthly uptrend as we have going right here. Beautiful monthly uptrend. Looking for the monthly higher low for the trend continuation. This level right here, guys, very solid level, right? $90 seems to be like a juicy area of support. It took the bulls almost a year to get through this location, so I assume that they will defend it. The 12 EMA is right there as well. Could be looking for that little pop on OKTA very, very soon. On the weekly as well, nice little breakout, retest the level, and now we're looking to reset this weekly uptrend in motion. So could be a very decent swing location. I would keep a very close eye on their earnings next week, guys. If we get some negative earnings and it pulls us back down to this lower 90 area, could be a nice juicy location. Fill the gap from the prior earnings, hit the 200 daily moving average right here. Could be an opportunity for a swing trade. The stops would be below your lows right here, 80, and then you're obviously targeting the prior highs at about 114. So not looking too bad. The one comment that I do want to make on OKTA, though, is the fact that they're not very cheap. Even though their stock price appears to be crushed, same thing as Starbucks, guys. They're just not that cheap, right? So 2024 forward PE is about a 43. It gives them a 2024 forward PEG of about 1.94. It's not that bad, but it's still close to 2, right? It's not cheap. If it would be under 1, then I would say, okay, this company's cheap. At 1.94, it's not cheap. It's not too expensive either. 7.1 price to sales. The reason I do that is because they aren't profitable. So they generate about 2.3 billion in sales per year. Market cap is about 16.3. So that's your 7.1 price to sales. little bit rich in my opinion. And here's the big one, guys, 30% stock-based compensation. This is the one reason alone that I just will not touch this company. This is very, very poor management, especially when you're unprofitable in such a high interest rate environment right now. The fact that you're not cutting back stock-based compensation is quite unacceptable in my opinion. Take a look at their quarterly headlines right here. We're going to go through these quickly. They'll paint you a beautiful picture, right? Total revenue up 20%, subscription revenue 20%, RPOs, how much money they have left in the pipeline, 13%, great. Trailing 12 months, best net retention rate for their subscribers, 111%. So everybody's being retained in the company, very, very good. Non-GAAP gross margin, 81%, operating margin, 21.2%, free cash flow margin, 27.6%. All of these look very good, right? They look very, very good at a first glance, because they're non-GAAP, right? But when you take into consideration the actual accounting standards, look how bad this company manages its money, guys. It's not, I mean, I know I'm laughing, but it's not very funny as a matter of fact. So in terms of their total revenue, you can see right here, 2.2 billion. This was the 12 months ended. 2.2 billion, and their cost of revenue is relatively small, $581 million. That is gross profit margins, guys, of like 75%. At a first glance, that's good. It's a software company. This company does identity solutions. Whenever you log into a website and you have to go through an identity screening process, this is the company that does this. Businesses use this for in-house software purposes, but also a lot of websites use their services too, right? So they're a software company and they're generating 75% gross margins. Perfect. Why do they lose money then? Okay, well, take a look at these operating expenses, guys. R&D, $656 million. Okay, I'll give it to them. Sales and marketing, $1 billion in sales and marketing. Why? That's just the main question I ask. Why, right? That is a lot, guys, right? And then you have general and administrative, $450 million, and you wonder, where is all this money coming from for these operating expenses, right? They shouldn't have that much overhead. They're a software company. Well, they have a little one next to them. So we go down the one, they say amounts that include stock-based compensation. Oh, stock-based compensation of $684 million. So you're telling me that if we took this gross profit right here, right? If we were to remove $650 million, $684 million, as a matter of fact, from your operating expenses, the company would actually be break even in terms of net profit. The reason that they're negative is because they have $684 million in stock-based comp in relation to $2.2 billion in revenue, guys. That's 30% of revenue is being paid in stock-based compensation to management and employees. That is unacceptable. Absolutely unacceptable, guys. The most egregious companies like Snowflake do 20%. For OKTA to be doing 30%, it's absolutely unacceptable, guys. They should be tapering that back way back. As a matter of fact, most of your big tech companies are well under 10, closer to 5 as a matter of fact. So this one, big red flag in my opinion. Good level for a technical swing trade here, but I think that there's better deals in the market right now than OKTA, to say the least. Now, moving into Arista Networks. This is a beautiful company, guys. So ANET, very gorgeous company right now, 1.7% on the day. Gorgeous technical chart, right? Beautiful monthly uptrend. This is one of the better beneficiaries of NVIDIA. They do pretty much networking servers for data center applications. So obviously their business completely took off after NVIDIA announced their data center warehousing business last year. Fairly decent valuation, guys, 2.58. But in terms of the peg, it's a little bit high. But then again, this company trades with the AI trade, so it will be a little bit more expensive. Now, the one thing I want to say about this company, guys, the fundamentals are absolutely amazing. You can't say anything bad about the company in terms of their fundamentals. Weekly, gorgeous weekly uptrend right now. Trying to recapture the weekly uptrend. The point that I want to make, guys, is because it's a little bit expensive and because it's at the all-time highs, and also because on the monthly, slightly overbought, even though it was massively overbought out here, still slightly overbought right here on the monthly. On the weeklies, a little bit extended in terms of right now, especially concerning the valuation. The moral of the story for ANET, in my opinion, guys, to start a position right here is a risky endeavor, in my opinion, right? Very, very risky endeavor to start a position up here. However, if you are holding a position with much favorable fundamentals at the time, right, then you have an edge. You should be able to hold this position because this company will probably go up. But for someone wanting to enter this trade right here, guys, a little bit too expensive. and we are at the all-time highs. This dip in April was probably a great opportunity to pick up the company, but right now, guys, I'm just not seeing much of an edge for this trade, right? Where are we possibly targeting to the upside? Maybe 350, but the downside risk is a lot, in my opinion, especially at such a high valuation. It's a gorgeous company, yes, so that's why I maintain, guys, initiating a position right here. A little bit dicey, but if you're holding from prior, I don't see any reason to sell, and that's just my 2 cents on the company. That's pretty much everything we had for today's subscriber request. Spent a little bit more time on these guys just because I know I've been pushing them back for a while, so wanted to give a more encompassing look on all of them. Moving forward, I'll probably keep these to 1-2 minutes max. I'll give very brief fundamentals on them and then do technicals. In my opinion, I'm going to try to keep them to 1-2 minutes, but today we went a little bit longer, so hopefully you guys appreciate that. Now, let's take a quick look into my portfolio and wrap things up. All right, guys, so taking a look at the portfolio, wrapping up the week very, very nicely. We are currently closing in on 20.39% year-to-date gains. Very, very good recovery by the portfolio since the beginning of the year, at least, when we were in some little bit of cyclical stocks, right? Nike, Starbucks, stuff like that. BABA, CSIQ, solar plays, a little bit of Tesla as well. So now we finally got out of those plays at a profit. And since then, it's been a nice grind higher for the portfolio, really coming out of a beautiful earnings season for us. Really crushed it. Very, very happy with our performance. 20.39, the S&P 500 currently year to date, up about 11, and even the NASDAQ as well, right, on the year, up about 11, 12% too. So really coming up on a 2x versus the indexes. And I do believe this outperformance should continue true throughout the rest of the year. Going to keep trying and beating the indexes, guys, but we don't just want to beat them. We want to try and crush them as much as possible. Now, moving into our actual positions here, guys. So you'll see that a lot of them were closed, especially the ones that we were holding from yesterday. So Albemarle, we were maybe in jeopardy of being assigned, but this one actually we were able to close for a profit coming into the early morning, right? 123 was our strike price. And as of the morning move, we got a nice little bump higher right off our assignment price right here, closing the day. So we were able to close this contract for about 5 cents. So pretty much 90% profit on this contract. Happy about that. And we were also able to close the remainder of our AMD contracts for pretty much 100% gain, closing those for about a penny. So all in all, guys, we do still have a couple positions open, but for the ones that were closed, let's just go through. Right, there's a couple ones that were pretty much ending the week worthless, right? So let's go top down. So in terms of SoFi, we had some SoFi $7 puts. Those got assigned. SoFi ending right under our $7 strike right now, about $6.92. So we will be assigned 10 contracts, so 1,000 shares of SoFi on Tuesday morning. And we took the advantage of today's price action to also write some covered calls. So I didn't even want to wait till Tuesday, guys. Since it's a shortened trading week, I just wanted to throw out the covered calls right away. So you can see we got about 10 cents for those covered calls. So all in all, looking very good. On our most recent SoFi trade, that means we get 5 cents to get in. Our average cost is down to $6.95. Plus this 10 cents, our average cost is now down to $6.85. So looking fairly good. Happy to have this position into next week. Palantir, same principle, right? We had the 21.5 calls. These leading into this week. This was a roll. The actual premium was about 27 cents per contract. Once again, those ending worthless. We collect all the covered call premium, and we took advantage of today's price action as well to write more covered calls for next week. We got 15 cents, 6 contracts each. So that will once again contribute to bringing our average cost on Palantir further and further down. Our average cost on Palantir, since being assigned those contracts at 21.5 and 22 a bit earlier prior to the earnings, well, our average cost is all the way down to now about $20. So we're still making money on Palantir right now, and I'll continue running covered calls on this position. Now into Amazon as well. Amazon, we did have a closing trade here today. You can see that right here, the 180s for this Friday, right today, and these closed pretty much worthless. So we'll collect all this premium by tomorrow. These should be out of the account. I also wrote some 177.5s for next Friday, just because once again, next week is a shortened trading week. If ever I don't get a juicy opportunity for Amazon on the Tuesday session, at least I wanted to have one today. So we'll see what happens with this one. Got about 73 cents for them. Not quite 0.5%, but I'm still fairly happy with the way this one's going, especially since we get a free day of theta decay on that Monday session, right? Now, moving into a bit further here, guys, I already preemptively took a CRM 250 put. So CRM has earnings as of next week. The expected move on CRM, Let me just refresh that right now. So CRM's trading about 272 right now. And take a look, guys. I went with the 250s. The 250s are right around here, the 50 EMA on the weekly and our prior zone of support. So that's why I chose this location right here. Even at $300 after we did the valuation last earnings cycle after their earnings, right? Even at there, they were only at a 1.25 peg. So now at about $250, guys, this peg ratio is very, very cheap for such a solid company. That's why I went a little bit more aggressive with the 250s. The expected move with earnings, their earnings are next Wednesday. Well, it won't show it here, but the expected move was about 6%, right? So 6% from current prices would really put them right into, about 255-ish. And I went slightly lower at 250. So a little bit aggressive on these for me, but I like this company. I've been looking for this company for a discount for a while. So if I can get this 250 level, I'd be very happy taking some shares there. And as a matter of fact, I didn't only do that on CRM, I actually added some calls. So we went with some 1 month calls, June 28, we went with the 295s. So a little bit out of the money. If they do have a very good earnings quarter, which I do think they will have, that's not that far away from current pricing, right? Only really a move of about 8.73%, not that much. 30 days worth of time. So this is purely an earnings play. So looking forward to see how this one plays out. If ever it doesn't play out, guys, well, at least we got $1.78 for these short puts right now. So it's going to really contribute to offsetting the cost of this trade right here. And then we also went with some leap calls, guys, pretty much 1 year time worth for the, the almost 1 year, right? 300 days, roughly March 2025 here, right? So we got the leap calls, $240 calls for about $54. So our break even on this is $240 plus 54.5. So about $295, let's call it, right? That's not that high, guys. $295, we just did it right before. $295 from current share price is only about 8.5%. So I only, to pretty much break even on this trade, the stock only needs to move up 8.5% by the next pretty much 10 months, right? 10, 11 months at this point. So looking very, very nice on those. Happy with the level I got, guys, and I'm only using this as a share replacement strategy. They are in the money. They're pretty much 75 deltas. When I do leaps, I always go for about 70, 75, even 80 deltas. It usually provides the best risk profile right here. I'll show you a risk profile just so you can understand. This is optionsprofitcalculator.com. So the reason why I go in the money versus out of the money, well, here is the out of the money chart right here. So you can see these are the 21st of March, 2025, 290s. So these would be out of the money, right? You can see if the move up happens fast, you do make a decent amount of money. But as time progresses, if the stock is not going up, look at the risk profile, guys. Your option really erodes quickly. And dare I say, if it stays the same or whatnot, by September, October, you start losing a little bit of money right now, even in the 280s, which is higher from this region right here. So the risk profile is really skewed for out of the money ones. If you want a big move up quickly, right? That is not what I'm looking for. I'm just looking for consistent move higher. I don't think CRM is going to massively outperform. I think it's just going to be one of those steady growers, right? It's not NVIDIA. So taking a look at the in the money call profile, the one that I got, the 240 strike, you can see a lot better risk profile, right? It doesn't look like this. It looks a little bit like this. So the gains on the top are a little bit tapered. You won't make as much money and the contract is a little bit more expensive, but at least what you get, guys, is a nice margin of error. You can see that even with all the time decay all the way through March, if the stock is at least $295, at least I still break even, right? That is fine, which is not the case for the out of the money one at the 290s, right? These out of the money ones are 290s. Even if you expire at 290, you can see, guys, you're going to lose all of your money, right? So that's the benefit of going with the in the money trades. It is a more risk averse profile, if you will, but I like this one. That's why I go for the in the money trades. It just gives you more leeway, guys, in case the stock doesn't move immediately in your direction. So that's a quick little tidbit on leap options for you guys, if ever you are interested. And then a few more positions, guys. Well, we had the Elf Beauty. Those obviously expired worthless. Elf is trading right now at about $195. So we obviously collected all those premiums as well. And the one last one that we did get assigned for the week here, guys, is Square. Square 68 puts. We were assigned on those. So we will have to take 100 shares of Squares at $68. Not too far away from us right now, right? $66.34 right now. Decent level area of support. My next DCA is probably going to come in at the the lower $60 mark, excuse me, if we come into there. So Square not looking too bad. And same thing, just because it's a short trading week next week, I threw on the calls right away, got 62 cents for the $68 covered calls. So all in all, we've collected about $1 in premium total. So our average cost on Square right now is actually $67, right? So not too bad. I'm fairly bullish on this position as a whole, looking forward to seeing how we can manage it. And that's pretty much everything for the week, guys, which gives us a grand total this week. Here is all the trades that I showcased. All of them were on the channel here, guys. You've seen all these trades. I'll go through these slowly, right? All the ones from Monday, all the ones from Tuesday as well, all the ones from Wednesday with the NVIDIA and the Elf Beauty trades, and all the ones from, well, all the ones, 2 trades from yesterday that we closed. No trades today, guys, that were opened, right? We didn't open any trades today. So all these, the reason that you only see Monday through Thursday is because all those trades were opened on Monday. And then whenever I close them, whether I close them on Thursday, Tuesday, Wednesday, Thursday, they will still fall into their opening bracket trades, right? So all in all, guys, very decent week as a whole. Our total premium realized is $2,748 for the week. Not a very bad week, quite a juicy one indeed. So fairly happy with that as a whole, guys. So that's pretty much everything for today's video, guys. Hope you guys enjoyed it. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. And consider subscribing to the channel if you're new, guys. Would love to have you here. We do these every Monday through Friday after the close. And as usual, guys, if you have any questions whatsoever, or if you would like to have one of your tickers featured on the channel for a little bit of analysis, please leave everything down below in the comments. Anything you want me to look at a stock, technical analysis, an options play that you're thinking of, anything you want, leave it down below in the comments, and I'll do my best to answer you within the first 24 hours. So take care, guys. Have a beautiful weekend. See you on Sunday night for the top 5 options play video. And on Monday, since there's no market, I'll put out a video. This weekend, I'm going to go hard, and we're going to try to find the top 10 plays that are still undervalued, still good companies, even though the markets are at all-time highs right now. So I'm going to put together that list and do that video on the Monday session. So take care, guys. Once again, I'll see you soon. Peace.